There's a lot of talk right now of whether or not we're in a buyer's market. And I'll tell you that real estate is hyper local. And if I get back to the true definition, technically, the National Association of Realtors will tell you that 1 to 3 months of inventory is a seller's market. 4 to 6 months is a balanced market. And 6+ is where you see a buyer's market. We don't have 6 months of inventory, at least not yet. And I want to go through the details. But from where I'm standing right now, it feels like a buyer's market. I mean, with higher rates and home prices and a presidential election drawing near, many would-be home buyers are feeling the uncertainty and sitting on the sidelines. We're seeing this in the mortgage purchase application numbers, as well as the declining home sale counts. Lower home sales means inventory is sitting on the market longer, yielding higher active inventory numbers. This is especially noticeable given the strong seller's market we had been in. But shift happens. So in today's video, while per NAR's technical definition, I can't call it by any stretch a buyer's market, I want to talk about the data that's pointing to an increasing buyer opportunity market nationally and here in my local market of Denver, Colorado. I'll also cover how you can take advantage and win in this shifting housing market. But before I get ahead of myself, I'm Nicole Ruth, founder of the Ruth Team, wealth builder, real estate investor, and mortgage professional of over 23 years. And if you find any value in this content, do me a favor and hit that thumbs up button down below and subscribe to this channel so you never miss a weekly housing and mortgage market update. Let's quickly explain the difference between a seller's market and a buyer's market. In a seller's market, there are more buyers than there are homes available. This high demand means sellers have the advantage, often receiving multiple offers and sometimes even selling above the asking price. On the flip side, a buyer's market occurs when there are more homes for sale than there are buyers. The surplus of inventory gives buyers more leverage to negotiate prices, to request repairs, or to ask for seller concessions. Now, let's take a quick look at what's happening nationally. As of September 2024, the total existing housing inventory across the country had risen to 1.39 million units. That's a 1.5% increase from August and a substantial 23% jump from September 2023. So there are more homes on the market now than we've seen in recent years. The month's supply of inventory has also increased to 4.3 months from 4.2 months in August, and up from 3.4 months a year ago. For new homes, there's about 470,000 units for sale, which translates to a 7.6 month supply at the current sales rate. Of course, new home counts include homes not even started yet, which makes the months of inventory a bit less move-in ready. Regardless, both of these higher inventory counts is giving many buyers more options and potentially more negotiating power. Prices are interesting too. The median existing home closed home price is now $404,500, marking a 3% increase from September 2023. On the flip side, the median listed home price is $425,000, which is actually a slight 1% decline from a year ago. This suggests that while existing homes are fetching higher prices, sellers are starting to adjust their expectations on their listing prices. Homes are also staying on the market longer. The median days on the market is now 55 days, making it the slowest September in 5 years. Plus, about 26% of listings are seeing price cuts, a 2.5% increase from last year. This indicates that sellers may be more willing to negotiate to attract buyers. Some experts see this increased inventory as great news for homebuyers because it provides more choices and opportunities to find the perfect home. However, others point out that the high cost of construction and the continued increase in existing home prices remains a barrier, making homes less affordable relative to household budgets. So while there's more inventory, affordability can still be a challenge. Of course, we know how real estate is hyper local. Despite the Federal Reserve lowering interest rates by a 0.5% or 50 basis points, a larger cut than was even expected, rates have been climbing upward, slowing down buyer activity. If I'm looking at the 11 main counties surrounding Denver, the median closed price dropped slightly by 2.34%, going from 590,000 in August to 576 in September, as active inventory increased 46% from last year to 11,115 units for sale at the end of September. Homes are also staying on the market longer. The median days a home spends on the MLS, or the multiple listing service, has increased by 19%, rising from 21 days to 25 days here in Denver. So houses aren't flying off the shelves as fast as Denverites are used to. One of the most notable trends is how the months of inventory have steadily climbed since May of 2023, when we had 1.25 months of inventory. Fast forward to September 2024, and that number has jumped to 3.6 months. This is the first time that we've crossed the 3-month mark in that time, meaning it now takes an average of 3.6 months to find a buyer. This shift means buyers are gaining more negotiating power and have more options to choose from, even if it's not officially a buyer's market. So what does all this mean for you as a buyer? Homes are spending more time on the market and experiencing more price reductions before finding a buyer. This is directly due to waning buyer demand because of higher interest rates and, to some degree, anticipation for the upcoming presidential election. Now, many buyers I talk to are waiting for the perfect home before submitting an offer. I mean, they're not willing to compromise on a home that they have to pay more for due to higher interest rates. However, when they do find that right home, they are eager to negotiate. So as a buyer, how can you make the most of today's market? Number one, do your research. Understand both national and local market trends. Keep an eye on inventory levels, price reductions, and how long homes are staying on the market. Number two is get pre-approved. Strengthen your negotiating position by being financially prepared. Sellers will take your offer more seriously if you have your financing lined up. Number three is work with an experienced real estate agent. A savvy agent can help you identify stale listings and negotiate better terms on your behalf. Number four, do not be afraid to negotiate. Now is the time to ask for price reductions, closing cost assistance, or repairs. Sellers are more open in negotiations due to increased competition. And number five, be patient but be decisive. While you have more options, good deals are still getting snapped up quickly. If you find a home that fits your criteria, be ready to act. Ultimately, sellers need to understand that it's simply taking longer for homes to sell. Months of inventory is expected to continue climbing as we move closer to the upcoming holiday season. Many sellers are holding off listing their homes until the spring to try and time their sales more strategically. Historically, real estate selling seasons pick up in the spring, and that's when sellers experience the highest sales prices. But here's the thing. If you're waiting for the end of the election cycle and the holidays to wrap up, you as a buyer might be kicking yourself later for not striking while the iron is hot. Historically, home prices tend to increase in spring markets with increased demand, meaning you could end up paying more if you wait. To wrap things up, while some may argue that we're not officially in a buyer's market, it sure does feel like one. Increased inventory, longer days on market, and more price reductions all point to more opportunities for buyers, both nationally and in Colorado. The trends currently are moving towards a buyer's market, giving you more leverage than we've seen in years. Please let me know in the comments below what you're feeling out there in the market, or if you have any questions. And if you want even more insights into the housing market, check out this video I have linked on the screen now. And I'll look forward to talking to you soon.